Hi everyone, welcome back to Corporate Decoder, the place where we break down complex financial filings, and here to help you avoid playing hide and seek with your money. Get ready to dive into Equity Bancshares' latest report. It looks like they're serving up some fresh financial news, and let's see if it's the main course or just a garnish. Before we get into the juicy details, if you love getting clear, no nonsense insights directly from these SEC documents, make sure you're subscribed. And if you want to chat about these findings and more with fellow finance enthusiasts, join our Discord community. The link is in the description below. Alright, so we're looking at Equity Bancshares Inc. and they've dropped a current report, Form 8K, which usually means something important happened that the public needs to know about pretty quickly. Think of it as a company's urgent bulletin. The date that's making all the buzz here is July 14, 2025. This is the day the company is reporting that something significant occurred for this filing. And for those keeping track of where Equity Bancshares is traded, their Class A common stock is listed on the New York Stock Exchange under the ticker symbol EQBK. Now, this report specifically talks about their financial results for the second quarter that ended on June 30, 2025. So the big news they're sharing is about their financial performance during the second quarter. They've released a press release that announces these results, and that press release is attached to this filing, kind of like an appendix. This is where we'll find the nitty-gritty numbers that tell us how the company has been doing. This press release, Exhibit 99.1 as they call it, is the core of what they are announcing today. It's important to understand that while this information is being shared, it's not being considered officially filed in the same way as a big annual report. This is a distinction that matters for some legal and compliance reasons, but for us decode lovers, it means they're giving us an update. Beyond just the press release, Equity Bancshares also plans to host an investor call. This is typical for companies after they release their financial results. It's their chance to talk directly to investors, analysts, and anyone else interested in the company's performance and to answer questions. Mark your calendars. The call is happening on July 15, 2025 at 9 a.m. Central Time. This is where management will likely dig a little deeper into the numbers, explain the trends, and give their outlook for the future. They've also furnished an investor presentation, Exhibit 99.2. This presentation usually contains slides that summarize the key financial highlights. Think of it as the visual story behind the numbers. It's often a more digestible way to see the company's performance at a glance. And finally, under item 9.1, they list all the exhibits that are part of this filing. This includes the press release and the investor presentation we just talked about, as well as the interactive data file, which is helpful for those who want to dig even deeper into the raw data. Now let's get to the meat of the matter. The financial results themselves. Since this filing is focused on the earnings release and investor presentation, we need to look at what those documents would likely contain. While the actual numbers aren't directly embedded in this 8K in a table format, these documents are designed to present the crucial financial metrics. For Equity Bancshares in the second quarter, we'd typically be looking for key figures like net income, earnings per share, revenue, loan growth, deposit growth, and perhaps efficiency ratios. If their income statement showed, say, a significant increase in net interest income, that would mean their core banking business of lending money and collecting interest is booming. Conversely, a jump in non-performing loans would flag concerns about the quality of their lending portfolio. Let's imagine a scenario from their investor presentation. If they reported a 15% year-over-year growth in loans, that's a strong sign of business expansion. But if their provision for loan losses also jumped by 25%, it suggests that while they're lending more, they're also anticipating a higher risk of borrowers not repaying. This is where we need that Warren Buffett style analysis. Are they growing smartly, or are they taking on excessive risk for the sake of growth? We'd scrutinize their efficiency ratio. A lower efficiency ratio is generally better, meaning they are spending less to earn a dollar. If this ratio ticked up, it could mean their operating costs are climbing faster than their revenue, which would be a red flag about profitability. Think about their revenue streams. Banks often have a mix of interest income and non-interest income, such as fees from services. If fee income is growing strongly, it shows diversification and resilience. If the report indicated a significant drop in non-interest income, we'd want to know why. Is it due to a specific market event or a more fundamental shift in their business model? Also important is deposit growth. For a bank, stable and growing deposits are like fuel for their operations. If deposits are shrinking or stagnant, it could limit their ability to lend and grow, putting them at a disadvantage against competitors who have ample liquidity. Considering the banking sector as a whole, we'd also think about the broader economic climate. Are interest rates helping or hurting their net interest margin? How is inflation impacting their customers' ability to repay loans? These external factors play a huge role in a bank's performance. From my perspective on equity bank shares, based on the typical information in such filings, the company seems to be actively communicating its performance and future plans. The emphasis on an investor call and a presentation suggests transparency and a desire to engage with stakeholders. However, the real health of the bank, as always, lies in the details within those exhibits. If their loan portfolio quality is maintained while loan growth is strong and their operational efficiency is improving or stable, that would point to sound management. If, however, they are showing aggressive growth with increasing risk indicators and rising costs, then caution would be advised. We need to see those numbers in exhibits 99.1 and 99.2 to truly form a solid opinion, but the focus on transparency is a positive signal. Alright, that's our quick decode of this equity bank shares filing. What are your thoughts on their approach to sharing financial news? Do you see promising signs or potential pitfalls ahead? Drop your comments below. If you found this breakdown helpful, please give this video a like. It really helps us keep these insights coming. And most importantly, make sure you subscribe so you don't miss our next deep dive. Don't forget to check out the Discord channel linked in the description to continue the conversation. Thanks for watching, and we'll see you on the next decode.